Hey, welcome. It's Monday. That means we're talking real estate or real estate made simple. Today I'm going to be sharing with you due diligence, how to make $1 million because you do proper due diligence, and how to protect yourself against that $1 million when you're selling your deal so that a guy like me doesn't come in and exploit some situations, all your weaknesses in the due diligence. Now, when we talk about due diligence, what we're talking about is, and I got Ryan Secos here with me today.
And you know real estate excites me.
That's right. Grant Cardone's my name.
Captain Ryan is my name.
Oh, we got all kind of issues here. We got the camera going slanted. Yeah, that's awesome, man. That's awesome.
Even with issues, it's a slant like a roof.
Please comment below about what you think about a cameraman. Johnny the camera guy, actually. Just put a little note below if you love Johnny the camera guy for giving us a little tilt.
Great guy.
Due diligence, perfect, by the way. Perfect opening, Johnny, for the due diligence thing, because, you know, if a sidewalk was not properly farmed and leveled, it will cause you a water problem, which will result in a mold problem, which will result in some tenant suing you because they're like, I got, and you're going to get it. Mold is one of the due diligence items. So I'm going to be sharing this. Go ahead. Ryan.
No, and sorry to jump. I just, it excited me for, you said $1 million in due diligence, right?
Yeah.
Like, what's the biggest, do you have a number in your head? Like, what's the biggest savings you've ever saved on a deal in due diligence?
Well, we saved $850 off of a deal just up north here on a roof. I had negotiated the contract by doing my proper due diligence. The due diligence is what? It's a physical and it's a financial check of the property. Physical, financial. Would there be another one, Ryan?
Physical,
and maybe one other, which would be
personal. I mean, personal is like
no.
It
would be all the regulations, like all the local
legal.
Yeah, some kind of legal. Could be some legal issues, right? Could be some lawsuit against the property. That is part of your due diligence. These three items right here. Most people spend all their time on the physical. Physical is not the only one. Now, the one that Ryan just brought up, where I saved $850,000 on a roof. It's because we did proper due diligence. Now, understand, if you do your due diligence before you have the deal under contract, you're never going to get the deal.
Great point.
I'm going to say that again because most people will miss this. If you do your due diligence, thorough due diligence, you don't want to do that. Before you get a deal, you're never going to get a chance to do thorough due diligence because they're never going to put it under contract. If you say, hey, the roof's bad, I need the $850 before I put it under contract, they're going to tell you, read between
the line.
My fingers, particularly these two right here on the outside, read between my lines, and you're never going to get the deal under contract. So the timing of your due diligence is critical. Doing too much due diligence, being too negative about a property before you go into it, even the financial audit, okay? Now, I'm reading right out of our resource manual, Real Estate Resource Book, Grant Cardone. This is exactly the 3 pages of due diligence we do on every property. Typically, a due diligence on a property, 100 units, is going to cost you, what are we going to pay for that due diligence? Physical checks.
Yeah, $50,000 to $100,000.
For that? For a 100-unit deal? How much, don't I pay like $38 a unit?
Well, that's just one part of it. I mean, you could use the lower number, $50,000 for 100 units. I mean, it's pretty expensive.
Well, no, I'd pay $5,000, right? 50 times 100, or nobody would do that for.
No, I'm just so the $38.
What do I pay Weller to do my due diligence per unit?
$25.
Yeah, okay.
I was talking everything.
So now,
because you got legal and everything else, So that's.
Oh yeah, I'm not talking about all that yet. Okay, so it's going to cost me $2,500. Is that right? That's all I pay for that?
Yeah.
You don't want to do your own due diligence.
If that's all, free. You get it for free because you have so much scale.
Yeah.
But yeah, typically it's $25 to $35 per unit just for the physical.
Can you move
walks.
over this way so I'm not looking at you from a weird angle? So I'm going to pay somebody $25. What are they going to do on that audit or that due diligence?
So they're going to walk in the unit. So they're going to do the unit walks.
Take pictures.
Look under the sinks. Check the condition.
Whole team goes in.
They're also going to go into the leasing office and they're going to do all the leasing audits and inspections, right? So they want to go do the rent roll.
Okay, so they're going to do the physical and the financial.
Yep.
Now, a lot of people, when they think about due diligence, they're thinking about just the physical. So in that one deal that I put under contract, I said, yeah, I'll pay you your $40 million. I'll give you your $40 million. We put it under contract. I got to know I want to buy that property. You need to know that you want to buy this property to do all this work. I started applying for a loan. We send our team over there, and we found out that we had a roof issue, okay? I then go out and get bids on the roof, find out the roof is going to cost me $850, $9.25, or $1.1 million. We got 3 bids on it. We didn't tell the seller anything. I went back to the seller and said, look, I'm good with the $40 million. I need a new roof, okay? Now, I did not do that until I had done my financial audit. What is on the financial audit? Because you will save more money. Ryan asked me, what's the most amount of money you've ever saved in a deal? I saved $850 on a physical audit. But where you save the real money is on the financial audit. Okay, the financial audit is I got 100 units, and you told me they were 95% full, and you told me that they were that the NOI on the deal was whatever number, $2 million, and that's what they said. And you said that we were trading for a 5.5 cap. That's all the things that you said, and I love this asset. None of this matters, by the way, if you don't love the asset. You have to love the asset, because if you don't love the asset, why would you spend money, time, energy on legal? That's why so many of you never get a deal, because you don't love the asset, so you try to steal the asset. You're like, yeah, I'll take her home with me, but it's late. Like if it was early in the night, you'd never made that decision, right? That's why you took so long to do the deal. So you got to love this deal. You understand what I'm saying? You need to love the deal. Otherwise, why would you invest the money to go do the financial audit on 100 units to find out Natalie lives in one of the units? And it says that she's been paying $1,500 a month, but the truth is she has never paid $1,500 a month. Okay, she's the sister-in-law, and she was given a deal. Now watch this: $1,500 a month. When I do a good audit, first of all, if they lie once, they'll lie twice. There is never one lie. Like there's never one flea, there's never one tick, there's never one crim. Crims, they hang out together. Okay?
Is that why you asked the same question
so
10
many times
to the same broker?
Hey, anybody living in the property that doesn't belong in the property? Anybody not paying on the property? Am I going to find out anything in the audit, man? Hey, Grant, you good with this price? This will happen to you. The seller's going to say, are you good? You going to close the deal? We got a deal? Sure. You going to retrade me? Retrade means come back and ask for a better deal? No. Dude, as long as everything you're telling me, I got a 5.5, I got a 95, I got everything, I find out everything that everything is everything, we got a deal.
Yeah.
Now, the moment I find out that Natalie over here has not paid $1,500, that's 12 months, that's $18,000. And by the way, she is number 100 in the property. Number 100 for a professional expert. Why so many people decided to just partner with me rather than do their own deal, they would miss this. They would miss 2 things. First of all, that Natalie's not been paying. Number 2, they would miss, because you guys don't have the time to go audit all 100 units.
Yeah.
The second thing you would miss is how to negotiate that $18,000. What do you think that $18,000 is going to be worth to me, Ron?
At a 5.
Because I'm a whack the whole thing.
18,000 divided
That's
by.
900. Let me see, $18,000
Yeah.
divided by 0.055.
Half.
$327,000 is what that's worth to me. So you guys would ask for 18 grand. I'm like, I ain't asking for 18. I'm asking for what it's worth. And they're going to be like, well, that's ridiculous. We're 3 days from closing. We're 3 days from going hard with all the money. Or I'm 3 days from giving them all the money. We just made an offer for what? Tell everybody what we made an offer on.
$200 million.
No, the other one.
Which
The one I just signed this morning. That was Friday. Today.
Oh, the cash
Come on,
deal.
man.
The cash deal. Come on. $40 million cash.
Yeah. Close when?
Due 17 days.
17 days, I'll give you a check for $40 million. You want to do it or not do it?
Due diligence, 7 days.
7 day due
So
diligence.
all the stuff you're talking
all the
about?
Stuff I'm talking about. The lease audit, the financial audit, the physical audit, going through everything, finding out who lives where, blah, blah, blah. I'll write you a check for $40 million. They could come back and say, write me a check. I'll write you a check in 7 days, dude. I'll do the do. Okay. And then I'm going to pound these people out. By the way, the people that I'm buying from are professionals, so they're not going to typically not get all emotional.
That's a great point.
Yeah.
Because what I was going to say is that your 7 days, like most people, they do 25 to 30 days due diligence. Your 7 days is confident because you already know you have a team of 10 people who are going to go in there tomorrow.
Yeah.
Because when I make that call,
I'm in Miami. That deal's in Houston.
Joe and the boys,
they'll be there tomorrow.
Yeah, they're rolling out tomorrow. They're on the plane. They're going to that
Yeah, I don't need to call Joe, by the way, and say, will you be there?
Yeah.
I'm going to call Joe and say, Joe, be there.
8 o'clock.
I got something else going on. Joe, be there. Drop the other thing. And if you want to play this game, you guys want to make millions and millions and millions of dollars. Watch what this is going to make me. $1,500 times 12 is $18,000. I know there's another lie. Guarantee there's another Natalie.
If there's one lie, there's many more to follow.
Please travel together. Lies stick together. Okay? It's like getting a speeding ticket.
Uh-huh.
Right? The reason you get all freaked out is because you're like, dang.
All the shit they did.
Dang, dude, dang. I mean, how many times have I not got busted?
That's right.
You got to get all good with it. You know, I had a cop give me a ticket once for he's like, hey man, how fast you think I was going? I said, well, before you saw me, I was 132. Okay, I thought I saw a blip of you. I shut it down a little bit. What'd you get me at? 112. You should have seen me like 30 seconds before that, bro.
That's funny.
I don't get all paranoid because I know I've been speeding a bunch. Like I don't even care about give me the ticket. You're probably not going to take me to jail over it. Okay, $1,500. That's what they said their rents are. Use everything against the seller at that right time. He says he got $1,500. He told me that's what Natalie's been paying. Times 12 is $18,000. If I divide by the cap rate, if I actually know how to use a cap rate,
right.
Most people do not.
Mm-hmm. I didn't.
Most professionals don't know how to use it.
Grant used to make fun of me when I first came in. He's like, you don't even know what cap rate even means. You know, what is the NOI? Like he just runs the NOI 7 ways to Sunday. Like he can come up with debt and payments and value in 2 seconds.
$327,000, $327,000. Now that seller's going to say, yeah, but man, the whole $1,500 doesn't go to the bottom line. It does if it's the 100th one.
Mm-hmm.
See, the units between 95% and 100%, that's where all the money's at right here. Okay, it doesn't cost any more to run a property at 99% occupied as it does at 95. My expenses don't go up. So a majority of that number. Look, the first 50 units on a 100-unit deal lose money. Mm-hmm. You're negative.
Why?
There is no cap rate.
Because of management and the team and just all
expenses, property,
landscaping.
There's no way the first 50 units never cover the cost of the property.
Yeah, and
right?
From 95 to 100%.
You got to be at 80% to get even, break even. Most of our deals will be 80% break even. When you get to 90, a little bit of money. Between 90 and 100 is where you start making your positive cash flow that we can distribute to our investors at Cardone Capital. So that's why these things, first of all, you got to find the right piece of property, because if I break even on a piece of property, I'm good if I break even on a piece of property, by the way. The one behind me, dude, if I had a break even month, it wouldn't kill me. We bought a deal in Austin. First month, it paid us 3% to the investors, annualized. My sister called me, why is there only 3%? Because that's all there is. Talk to somebody else about it. Okay, I'm fine with it. I'm fine with it because I know over time I'm going to get more than 3. I would be happy with 0 in some months. It doesn't bother me because I know, K-N-O-W. I know Johnny's a good guy. I know that property is going to make us money one day in the future. This is why Warren Buffett, he's like, well, I really don't care. I really don't care if the stock goes down today because he knows he's good to be in Amex. To own 12% of Amex over time. All right? So I'm going to go back and negotiate for $327,000 here, but I'm probably not through looking for issues, because where there is one issue, there's always a second issue. I was doing a deal in South Carolina, and we found out there was polybutylene. Polybutylene is a problem when it's a problem. It's not a problem when it's not a problem. It's basically, you want to describe it?
Well, it's just a type of plumbing that they use for the units. So typically they use
during
PVC.
A particular time.
Yeah,
okay,
so in
back
the 80s,
years ago.
Yeah, in the 80s they used a material called polybutylene to run for plumbing. Now what they found is that the polybutylene has issues.
The polybutylene by itself is not really an issue. The polybutylene, when it hits angles, it
Creates
becomes
weaknesses.
It
Yeah.
creates weaknesses, and what you're looking for, you don't look for the polybutylene. Polybutylene is not the issue. It's increase in water usage. That's the issue.
Expenses. Yep, expenses.
So what I was doing, I was buying this deal. It was $9 million. It was in South Carolina.
Mm-hmm.
I told the guy I'd give him all the money. I said, yeah, dude, we're good. I'm good. Everything good. Anything I need to know about, I always do this. Anything I need to know about, just tell me, man. Just tell me. Okay? Like if you got a disease, just tell me. It doesn't mean I'm going to throw you out. I just need to know. I just want to know what I got to work around here, right? Okay? Oh, no. I'm telling you everything. It's all in the package. We disclose everything. You guys are honest people, right? Because I'm an honest guy. Oh, yeah. At the end, we found out the water, we didn't understand why water had spiked. In our due diligence of our third category, which were government things that you can't get around, which is water, electricity, gas, regulations, lawsuits, situations.
Yep.
We found out,
Yeah, no, I'm agreeing. Yeah.
Reviews. We found a bunch of reviews about water problems. I got this messed up. So those reviews are due diligence. You're not looking for good reviews. You're looking for the reviews to give you information. Clues.
Yeah.
Okay. That cost that company $1,080,000.
And also to note, Grant, like
Okay, check it out. Can you mind me if I just finish this statement?
No, please do. Please do.
$1,080,000. I just got to $1 million, and you just wanted to run over $1 million. Okay, check it out.
Just add in, man. I'm just
check it
part
out.
of your
This
team.
company that owned this property knew about this problem and did not spend the money, and then they spent the money. Okay, they should have fixed this 3 years before. They couldn't because it didn't cash flow, because they didn't know how to manage property, because they basically overfunded a deal. They over-leveraged a deal back when you could get big loans on these deals, and they could never fix the polybutylene. All right. Now, notice they ended up paying for the polybutylene. Mm-hmm. That's my point to you. Mm-hmm. If you're selling something and it's going to cost somebody something, you are better off spending the money and getting it done than trying to sell it and have them do it, because they're going to ding you. It's going to lack. I'm going to lose my confidence in the deal. They get in a weaker position. I'm this far from closing. Mm-hmm. We're ready to roll, dude. And I'm like, hey, dude, okay, here's how we play the deal. Ryan seen me do this a bunch of times. I'm good at the $9 million. I'll pay you the full price. I need a check at closing for $1,080,000. And by the way, it's nothing to do with me. My lender is requiring this, not me. Yeah. Hey, you want to call them? Like, I'm all good. Like, it doesn't matter. I love plastic.
Yeah. I use it all the time.
I use it all the time. I mean, I don't have a problem. For $800 a month, these people should have a little leak in their house. But Fannie Mae won't let me do the loan with the polybutylene the way it is. Okay, we did the polybutylene for $800,000. They gave me the credit. Okay, they were weak. They were at the wrong time. I had $280,000 left to do patios and decks. I sold that piece of property for $23 million. I made $14 million. I said million.
Really?
Dollars. So now why did I make $14 million on that deal? Number one, okay, because I loved the deal and I was willing to buy it. Two, I did proper due diligence. Three, when I went to the marketplace to sell that property, they didn't have any issues. The roof was done, the decks were done, patios were done, the place looked good, had fire damage when I bought it. I cleaned all that up. That didn't even bother me, by the way.
Shouldn't.
Did not renegotiate an entire complex. One of the buildings was burnt to the ground. Did not have anything. I did not renegotiate the burnt down because I knew about it. What I renegotiated is what I didn't know about. Mm-hmm. Okay. All right. You wanted to say something.
No, you covered it. I was
Something
just
brilliant.
Well, no, I was just going back to your team because
Ryan Secco, folks, one of our investors and who runs Cardone Capital. You ever want to talk to Ryan about what we're doing at Cardone Capital to make people money? Oh, by the way, I had some investors that made, without ever visiting a piece of property, made a piece of $14 million because I know what I'm doing. So if you ever want to play with us at Cardone Capital, cardonecapital.com, Cardone Capital, you can email Ryan at cardonecapital.com. Go ahead, Ryan.
No,
Callers, he's out of things to say.
No.
Ryan wants to talk to Ryan. Can you show him your shoes, by the way, just for a side note?
Where?
Just put them in front of the camera. Just put them in front of the camera real quick, okay? Go ahead, Ryan, what's up?
My new favorite uncle, what's going on?
Yo, buddy, how you doing, man? Appreciate you calling in the show today.
Doing good. Thanks for taking my call.
attention.
Say again?
Hey, we got a deal.
Okay, we got a deal. Got a deal or got a question? Got a deal. Let's roll.
We got a deal. It's a little deal.
We got a baby deal.
Okay.
So we're looking at 9 units.
Okay.
We're 935,000.
Okay. 9 units. Man, you just make me feel so good about everything I'm buying. Right, Ryan?
We're going to try.
Let me guess. 1978.
What, my birthday?
No, what year? What year's the what year's the
I thought
property?
you were going to send me something for my birthday.
What year's
That's
the property?
awesome.
What year's the property?
1985.
Dang, I was only off by
7 years.
7 years. Not bad. Okay, 1985. All right. NOI.
65.
$65,000. Okay. All right. What do you want to know about it?
I don't know. I just want to know what you think. I'm just bouncing it off you. I like your show. I've been trying to call in for a while,
Oh,
but
thanks, dude.
it's always
Appreciate you calling
busy
in.
because you're so popular.
Thank you, man. What are the rents there? Let me guess. $740 a month.
Okay. How much?
$740.
No, a little higher.
How much?
They're all around 925.
Okay, times 925 times 12. Okay, so it's going to take in $99,000 a year if it's full. Okay, they're saying they have an NOI of $65,000. You know, okay, I can buy it, right, Ron? Maybe it does. You're going to manage this yourself. They don't have a manager. Is that right?
Yeah, I don't believe they do.
So 9 times.
Yeah, and they
8.
want $135,000. Yeah, I'd buy it, dude.
Yeah, that's what I was thinking.
Yeah, I'd buy it. I would buy it
If you want to
if-
manage the deal, because there's no manager
you're
there.
going to pay. You're going to pay you're going to make 50% on your money. I mean, that's why I would buy it. Like you're going to write a check for this deal, right?
What do you mean?
You're going to pay cash.
What does that mean to you?
No, we're not paying cash for it.
It's $135,000.
No. It's 935.
Oh, excuse me.
No, that's fine. I'm showing it's a 6.9 cap going in.
I thought it was $135,000.
No, I wish.
I was like, okay, shit. I mean, let me get it out of my pocket.
Let me write you.
Yeah, you were
let
coming here to do
me
it
pay in
yourself.
change.
Okay, let's see here. $65,000.
I've got enough quarters to do
Divided-
this one.
Yeah, divided by 935. And damn, I can't fill up my plane. 7%. Do I want a 7% return on this?
I mean,
Okay, so the way to think this out, all right? If you get a 7% return, you got to decide how much this work is worth. If you make 7% a year, you have 15 years. No, 12 years. You have about 13 years. It takes 13 years to get your 935 back.
Right.
That's the way you like it. Hey, dude, I'm not going to pay myself anything. I just want my money back. Number one, don't lose money. Number two, cash flow. Number three, make some money in the future. It's the only three things you're concerned about when you're buying real estate. How long does it take to get my money back? If nothing goes well, how long can I keep it and can I get my money back? 7 times 13 is 91. Okay, so 7.4 years. In 7.4 years, he will get his 935 back. In his case, he's not going to pay cash, so he's going to go to some lender in the town. 935. They're going to be like, look, you need to put $235,000 down. I'm just rounding. You're going to finance
Yeah, you
700.
got her.
Huh?
Yeah, you got her on the money.
On the money, sorry. And you're going to finance this. That's going to cost $42,000 a year. The deal has an NOI, he said, of $99,000 or something?
He said 65,000, but I think there's some. I want to go over that too.
No, I believe that. I believe he could get there. Okay, 23,000, and he put down 235. He makes 10% of his money. Okay, so now he only put 235 down. How many years does he have to have his money in that deal to be paid back? Right, 10 years. 10 years. 10 times 10 is 100%. You're looking to get 100% of your money back. So in 10 years, his down payment would be paid back. So the couple questions. One, is $23,000, that's your cash flow. Simple, man, keep this simple. At 23 grand, if you saw me work 50 deals, all 50 deals will end up on this chalkboard the same way. $23,000. And if you think this is valuable, please comment, okay? Like every day we give a free comment away. today, Bambi. Gotta love a girl with this name Bambi. Bambi LaShisha Davis. Huh? G&E show. You're the winner of our $100. So please comment if you're watching on YouTube. I love the interaction. I like the comments. Say something valuable, hopefully, and we'll consider it. Every day we give $100 away. So this 23 grand that he's going to make on this deal, the first thing to ask yourself on any venture, is my activity worth $1,900 a month? Is it worth the work to earn $1,900 a month? Forget the percentage. Everybody says, what's my percentage? Dude, it don't matter the percentage if it's not worth your energy. I'm better off receiving $15 a month that I put no energy into than $1,900 a month. Right? You understand? I would rather earn.
Yeah, I got you.
You follow me? I'd rather earn $15 times 12. What do we pay? Some of our investors earned $40 last month, right? Right? People are like, it's only $40. You didn't do anything, dude. I'd rather earn $480 a year doing nothing, zero, than $20,000 a year and spending energy and effort. Okay, all I did in the first one was put money down. All I did here was put money down, sign a loan, manage the property, do the due diligence, tell other people about it, have to answer phone calls, have to go to the property. Like you got to decide how much is that $1,900 a month worth to you in time, energy, and effort. Because if it takes time, energy, and effort, it's going to cost you more money of something else you could have been doing. Because Johnny cannot go to the property, collect the rents, and work for Diddy on the weekends. Maybe Johnny can because Johnny's Superman. Okay? So look, for me, I would not personally buy a 1985 building for a 10% return. Personally. How do you like the location?
I like it. It's great.
Yeah. Is there a swimming pool there?
No.
Is there security?
No.
Is there good lighting?
Yeah.
Is there beautiful landscaping?
You know, semi-beautiful for the area.
Is there a wall?
A what?
Wall.
A wall?
Like a compound wall?
Yeah, like a wall to protect the place, dude. So people can't just
Oh, no.
No wall?
No,
No wall, no pool.
it's safe here.
Where are you? What city?
I'm a couple hours north of Toronto, Ontario.
Yeah. Yeah, I mean, the rents are low, dude. Now you
Yeah,
know,
I mean-
then I start thinking, dude, is there another $200 a month in rents? Those rents are only $900. That's $1,800 more a month.
I'm thinking there's some upside potential.
Times 12, you know what that 1,800 reminds me of? That number I did with Natalie where they weren't paying me. That's $300,000 worth of NOI, increased value, if I could get another $200 a month. So then what you want to do is you want to go in there, raise the rents, flip the deal, and get out, pick up your 300 grand and move on down the road.
Well, yeah, I mean, you taught me that a couple days ago. Take the $25 a month times the number of units, divided by 0.05.
You a gangster. You a gangster, dog. You're gonna be the next real estate mogul of Ontario. Okay. All right. Let's talk to our next caller. Thanks for calling in, Ryan.
We got Brandon and Boca.
Big B in the Big B. What's up?
What's going on?
Talking to the next B. What's up, dog?
Hey, not too much.
Come on.
First tell Cat Ryan I said what's up. He said he'll never get no love. So,
He never gets any love. Show him those shoes though, dude, because show him the shoes.
Used and abused all the time.
Show him the shoes, dude, because when you wear those kind of shoes, just show him the shoes real quick. The kind of love you're gonna get.
Do you like them?
Is gonna require an AIDS check.
at Ryan Secco on Instagram.
At Ryan Secco on Instagram. Okay, go ahead, man.
All right. So last
You're the only one that heard what I said. You're the only one.
Football player again.
Did y'all hear what I said? Yeah.
What did you say?
Go back and watch the video.
You said at Ryan Secco on Instagram, right?
No. Just before that. Okay.
Would you say I was gay or something?
It was very funny. Okay, go ahead, man. What's up, Brandon?
All right. So this that Gator football player up here in Boca again. Last time I called, you told me to come in, but you didn't tell me Coach Jackson was coming. I'd tried to schedule my tour that day.
I'm sorry, man.
Anyway.
Sorry.
No, you good. Anyway, now that I've had a chance to actually read the book and go through the home study course, I had a question. I still don't fully understand equity.
Yeah.
So I have a two-part question for you. So
Okay.
You talk about, like, you know, when you were going to family and saying, hey, you should get that equity out of your house. I don't understand fully, like, what that entails. I don't know if that's getting a home equity loan on their part or a reverse mortgage or anything like that.
Okay.
And then the second part of the question is, because that's talking about using equity as an entry into a deal. And then you talk about, as an exit strategy, getting your equity out of the property so that you don't put money in a deal. Once you do that and you don't have money in it and it's cash flowing, I didn't know what under what circumstances would you sell after that?
Okay, good. So he's asking about, he heard in another show, Brandon's on our home study course, by the way. That's a 50-plus hour program, okay, with a resource book, with audio, with video. Like, I'm literally with you every day talking to you about real estate. Then you can, when you get home at night, you can watch it on your phone, your tablet, or your computer and watch me walking through deals. 50-hour program. There's a basic fundamental program that's about 8 or 9 hours long. I shot that in Turks and Caicos, and I came back to my office and did a deep dive on the same content, another 8 or 9 hours, maybe 10 hours long, where I start digging into cap rates, equity, how to use it, returns, how to build equity, force equity, how to get a loan, like everything. So he's asking about this very controversial thing that I talk about, you know, sell a home. Okay, you don't want to sell your home? Grab the equity. You love your home so damn much, and you got $200,000 worth of equity in your home, then get your equity. How do you do that? The best way to do it is to sell your house and grab your equity. That's the best way to do it, because now you don't have the liability. For all of you out there like, oh, my house is such a good deal. I love my house. Oh, my God, I love my house. If you love it that much, then borrow all the way to the hilt on it. Well, see, now we find out that this is a true liability. Because if it wasn't a true liability, if it wasn't a liability, you'd borrow money on it. Because if it was an asset that produced enough money, it would pay for the debt. But your house doesn't pay for debt. Pays for as much debt as you're comfortable with.
Yeah, you pay for the debt.
You pay for the debt, right? So let's say in Brandon's case, let's say he owes $400,000 on his house,
okay,
and his house is worth $600,000. Mm-hmm. He's asking me, I want to stay in the house because I can't talk my wife out of selling the house, because she loves the house, and you know she likes taking care of the house, and we like to vacuum, and we like security, and we like knowing our kids are happy here. Mm-hmm. Your kids are they're gonna get unhappier and unhappier as they get older. So as soon as your kids are old enough, they're leaving this house. I don't care if it's a mansion. I don't care if you got a yacht in front. I don't care if it's worth $50 million, dude. As soon as they can, they're gonna be like, fuck it. Bye-bye. I'm out of here.
That's right.
But I got a yacht. I don't care. I'm leaving. They're gonna go live in some crummy place because they want out of here. And then you're gonna be left in this house. Where'd the kids go? Okay, so watch. All I'm saying, Brandon, is rather than having this money dead, this money's not paying you right now. Right? You're making notes on the $400,000. This is your debt on the house. It's worth $600,000. This money's dead. It's not paying you. It's dead money. It's like money sitting in a bank. You know, if I had $200,000 sitting in the wall of my house, if I had $200,000 sitting in a wall,
I would grab a hammer.
Okay, like I got $200,000 worth of panels right here. Mm-hmm. I'm not like, oh God, like I should get my money back out of these panels. These panels make me money. You got $200,000 sitting in a wall of the house, or you got $200,000 sitting in the bank. You got $200,000 worth of gold. It's not paying you anything. Now the benefit of the gold is, unless somebody steals it, it's probably going to be worth something in the future. The money in the wall, who knows? Somebody could take that very easily.
Could rot too.
Okay, could rot. The bugs might eat it.
Mold.
So,
mold,
dude, what I would do is
mold.
I would get that $200,000. Like Brandon, if you take, what do you do for work, Brandon?
Well, I'm actually a mechanical engineering student.
That's excellent. So, if let's say you took that $200,000 and invested with Cardone Capital, it's going to basically buy a $600,000 position in our fund. Every $200,000 is worth about 3 times, maybe 4 times the money, depending on the deal I did at the time. It's probably going to be more conservatively, like 3 times. So what somebody just did was they took money out of their home. You kept your house. you're going to have to pay somebody on this, right? So you either go to your mom and say, Mom, I got $200,000 worth of equity at my house. This would be the smart thing to do. Give me 200 grand and I'll give you a piece of paper that says you own the equity in my house. I would do a side deal with her, not pay her any interest. Come on, Mom, you got the money sitting in the wall. It's not doing anything for you. And I would take that 200. You'd still owe her, by the way. Okay? And she's going to give it to you when she dies anyhow. I would just get it now. Promise to pay her back. Even if you can't, it becomes a write-off for her because she tried to collect it. I mean, it's smart IRS stuff now. And then I'd go put a position in Cardone Capital. That 200 grand will probably make you $10,000 a year. But that's not the play here. You're being paid to wait for the 600, for 200 to magically turn into 600 grand. Y'all follow all that? Or just like too many lines?
Hey, Grant.
Brandon, what's the chance if we just keep doing what we're doing right now? You got $200,000 in equity, $400,000 worth of debt, a $600,000 house. What's the chance that this is going to magically grow to 600 grand?
100%.
No. Zero.
It's
never going. For this to go to 600 grand means the house needs to become worth $1 million.
I see what you're saying.
See what I'm saying? So you probably, unless you're lucky, you probably had all the growth you're going to have out of your house. I mean, unless Mark Zuckerberg moves next door and starts buying up the neighborhood.
Well, and I like your suggestion too, because you said your home, if you have $200,000 in equity, you could have your mother do a side note, right?
Yeah.
That's awesome advice, because if you go to the bank,
I don't
they're
have to
going
go to the bank.
No, I'm just working through the scenarios for them, right?
Yeah.
So the question came up this weekend about a HELOC, right? So that was another option for people to take the equity out. Now, one of the things that you and I have even talked about is the HELOC.
Explain the HELOC.
So what a HELOC is, it's a home equity line of credit. So HELOC is short for you take a loan on your home. It's not. Typically, sometimes it's fixed, but it's not for 30 years, right?
Yeah.
So a HELOC is just a temporary line of business where people take a HELOC on their home and they can go out and use the money for other things.
You can go borrow against a 401k or an IRA for a short period of time.
I don't recommend this at all, and I don't think either do you, because I've had a HELOC before on a home, and they call that, and when they call that, it's due.
Okay.
30,
That's
60
why
days.
the best option, Brandon, is Ryan.
Sell your home.
Sell your home and get your money, man. The only reason you're having this conversation with me right now is because you're getting tweaked about why don't I have my cash. Okay, it's dead. Folks, look, 1/3 of America is going to die in the next
20 years.
Without any premature deaths. 1/3 of America is going to die in the next 30 years. Most of those people are homeowners. The largest proportion of people in America that own homes are baby boomers. When they start dying, these homes, not only will they be sold, they will be sold below market, and they will not be lived in again. Don't think that people are going to rush to live in your mom's home. The home I grew up in when my dad died, that home will always be lived in. Someone will always live in that house because that's where rich people live. That's the home we should not have sold.
Right.
The next home we went to, when my mom downscaled, which a lot of people are now starting to scale down, okay? Keep in mind, like 80 million people in America are more interested in traveling and seeing the world now than going back to their house every night. When my mom bought the next house, which was on a place called 20th Street, I think it was 2120 20th Street. It was across the street from a little junior high school. That house was probably worth 50 grand there then. That house is probably worth $38,000 today. Okay, I don't know, maybe it's worth 50. It is never going to go to 100. It's a dying neighborhood. The neighborhood there in Lake Charles is moving, okay? It's not doing this. Every neighborhood's winning. It's moving to another part of town. All the people are starting to move, and it's like a decaying tooth, right? Your front ones still look good, but you got this one in the back. It needs to be removed.
You've got one of those too, huh?
Thank you. Okay, so Brandon, based on this, what have you decided?
We have the next caller.
Oh, they dropped him off.
Okay, yeah.
I got Jose in San Antonio.
So by the way, that's how you guys use equity. Equity is what you go out and get from other people. Equity is what you put into a deal, okay? However you get equity. The only way you get equity is working. Like, it's work. I'll go work, somebody gives me some money, I put the equity in the deal. Okay, just so everybody understands, equity, there's a lot of places where you can have equity. I'm buying a deal right now, it's $200 million. It's 2 properties, 720 units. We're going to put down $83 million. Okay, now I haven't even called a bank about this. When you work your deals, you should know before you call a bank exactly how much money they're going to give you on this loan. I know based on, I mean, there's a little trick you can use. If you take the cap rate, particularly in these big deals, and divide the cap rate you're buying at, divided by 7.5%, that's probably going to be the percentage they're going to give you. I think this is 63.
Are you saying cap rate or NOI?
No, the cap rate. You take the cap rate that you're buying a deal at, I think this deal is 475, divided by 0.75. Yeah, that's 63%. Okay, now I happen to know that if I borrow 63% of $200 million, what is that? 63% times
63%.
200 million. That's 126. That's what they'll loan me. I know I can get the deal approved for 126, $126 million. But this is what they're going to actually cut me back to because I'm going to want something special in this deal, which is I'm going to want the rate to pull down under 4%. I'll probably be at 3.8. And there's a second thing I want that I'm not going to even tell you about right now because it's a little secret, dog. It's left for the pros. I can't let everybody know this one, okay? This is, I mean, it's David Copperfield. It'd be like me telling you how we cut the lady in half. And I'm not going to tell you right now. It's just too much, okay? Please comment below, though. If you think you know what that thing is, I'll award you and another person the $100. Okay, post in comments. Post in comments. Johnny, you know? Johnny, I'll give you the 100 then. Johnny, just post in comments. Don't tell me here, though. Okay, next caller.
No more comments.
My name's Grant Cardone. Ryan Secco is with us today. I got my whole real estate team. Cardone Capital, CardoneCapital.com. If you don't want to do these deals yourself, you're like, dude, there's a lot to learn. Okay, all I covered was 2 lines out of 3 pages out of a 240-page book. Okay, this is our resource book. GrantCardone.com/real estate course. GrantCardone.com/real estate course. Okay, you don't need to buy the, I mean, I guess you could buy this by itself, but you need the data.
Yeah.
You don't need more information. You need to know how to utilize data. Like, information is one thing. I'm utilizing data here, data points, right? So when you call and ask me a question, should I do this deal? As long as I have the right data points, I can say, yeah, I'd do the deal, or I wouldn't do the deal. And anything in between, I would or I wouldn't, is a maybe. And maybes, you don't want to do. Mm-hmm. I don't do maybes. And I don't do no's. I do yeses. And this is, if you go back to one of the first shows I did, I don't know, probably 300 shows ago, the most important thing in real estate is to know. Most important thing in life is to know. If you don't know, dude, you're done. If you don't know where you work is the place you should be, you can never perform at 100%. It's impossible. If you don't know that I want to be in this kind of real estate, then you're going to be looking at storage, or you're going to be looking over here, or you're going to be looking. That's not what I do. I know where I'm going to, I put a sword in the ground where I'm going to make my score. So you got to know. And the reason I know that is because I understand the demographics that are going to push apartments and renters and are going to continue to do that. So CardoneCapital.com, for those of you who are like, dude, I want cash flow. I want appreciation. I want the leverage. I don't know. I know this makes sense, right? That Grant Cardone is going to borrow $117 million, not $126. I'm going to put the extra $9 million down to get my little secret super weapon. I'm going to borrow $117 million on my name. Dude, I'm a good partner right now. You're going to put $10,000 down with me. Your 10 grand is going to ride on my $83 million. So I buy the deal for $83 million. John puts 10 grand in the deal. Some people would say, John might be all right in this deal. What would you say? The first time we took the plane, okay, my sister said, hey, how do you know that plane's safe? The pilots are up there. She's like, well, what's that got to do with it? We're all going to die together. They know more than I know. Shit, they willing to get in there. There ain't no parachute.
Yeah, there's only one parachute.
Oh, is there?
No, I'm just kidding. I'm just teasing.
I don't think there's any parachute.
No, Grant, and hey, just on the due diligence, because this show is really awesome.
But this is the point. Like when you guys pick a partner in real estate, make sure that partner has more at risk than you do. Make sure if you're going to buy stock, make sure the owners of the company are buying stock back. See, I'm in this deal, 117. Why am I buying this deal? I'm not buying this deal for a 4 or 5% return that we tell our investors. I'm buying this deal because I think, what do I expect to make? Quit worrying about what you think you're going to make as an investor. If you're going to invest with somebody, say, what are you going to make, Grant? Why are you buying this thing, Grant? Because you're tagging on me. It's interesting the investors don't ask these questions. What does Grant hope to make on this deal if I don't come in? I expect to make $83 million. I expect to get my $83 million back, number one. Two, I expect to get cash flow of $2.5 million a year while I wait. 200 grand a month. I'm sitting there, I got a check for 200 grand a month so that this didn't sit in the bank. And I want to give me a little $83 million padow. Okay? And that night we'll go have a little party, rent a yacht. Everybody has champagne. We get tired of champagne, we hit a little tequila. Be like, dude, this is an $83 million night. That's if I just am patient. If we do anything special there, right? If I did any great selection there, 83 becomes $166 million plus my cash flow, and who knows? Maybe I do something really smart and pick up another 10 or 15 or 20 or $30 million. So that's the game I'm playing. That's what we're doing at Cardone Capital. No one else in the country. No one. No company, no fund, no Fundrise. What's the name of some of these places?
Realty Mogul, Fundrise.
None of them, dude. Rich
Street.
Uncle.
They're all just middlemen trying
dude, they're
pose.
taking 10% to pay a commission to whoever took your phone call. We don't pay anybody in that. We are cutting the middleman out and allowing you to ride on
the coattails.
On the back of Moby Dick.
Mm-hmm.
Okay. And if it gets really stormy, I just eat you, and you can live on the back of my tongue.
That's not weird.
No.
No.
Okay, no. You know what I mean? I'll protect you is what I'm saying. When the weather gets rough, I'm going to protect you. Why? Because I didn't over leverage. We know what we're doing. We bought in a great location.
Yep.
Okay. So what? So what if the cash flow goes from 5% a year to 3% a year? And it does that for a couple of years. It does that for 2020, 2021. You're still getting paid to sit and wait. Now watch what happens in 2023. Rents pop again. Pop! And when they pop, let me tell you, when you take rents and hold them down for a couple of years, what has happened since 1945 is you hold them down or flat for a couple of years. Every year, like in the third or fourth year, all of a sudden they pop. 7%, 8%, 10%. If these rents pop, okay, because they don't stay at 3% a year. If they go from, let's say I got an $1,800 a month rent, I've seen 3 years in a row where rents went up 10% a year. 30% on that number is now 240. What is that, 30%? No. That's 540. Okay, that rent now in the fourth year is 2340, and I didn't even plan on that. We're talking massive escalation of our NOI. On that deal, 720 units, this is without normal appreciation. 720 units times $540. This will be the year I sell, by the way. In this case, it would be the fifth or sixth year. 720 times 720 times 540 times 0.90 times 12. That's $4.1 million. What'd you come up with?
4.199.
Yeah, okay, something like that. That's $188 million in increased value of the property. That means a guy could come in and pay me $388 on this deal. Okay? $388. What did I pay for it?
83.
Mm-hmm.
I paid 83.
Mm-hmm.
Okay? We paid 83. That's $305 million. I got my 83 back. Everybody gets their money back. Cash flowed the whole time. Somebody could pay me $388 and still get the same return I got when I bought this deal.
What did you do in that last part?
Okay. Now watch this. 305. But what do I owe on it? Let's say it's 10 years into the deal. I owe 117. I paid everybody back. I got to pay my debt off. My partner's the debt. Okay. Even if this took me 10 years, 305 less 117 is what? 183. Yeah.
305.
180. No, 183 plus 188.
117 is 188.
I make $188 million. I didn't make 80. Now we get the yacht and we skip the champagne. Jacuzzis are filled with champagne. Huh? Okay, it's stupid money now, dude. This could happen on that deal. Don't think it can't happen. I mean, I'm not exaggerating the situation here. If anything, I'm conservative on the situation. Remember, the first scenario was conservative. So how do you do due diligence? Do your due diligence and look for $1 million. Okay, don't look for a bad roof. Don't look for a paint job. Don't look for potholes. Don't look for some problem out here. Look for millions of dollars. Otherwise, you're just going to be the real estate guy that hates real estate. And most people that get in real estate quit after their first deal. They quit because it's like, dude, this isn't even worth it. Stupid. Ask your brother, your uncle, the cousin, your dad. Ask somebody that did real estate once and never did it again why they didn't do it again. They're going to be like, it's too much trouble. No, it was too small. What you did was too small. How much trouble would this be worth?
It's worth it.
And nobody's thinking about, well, the tenant called me at 2 o'clock in the morning. For $188 million, you can come sleep with my ass.
What?
For $188 million, call me every night at 2 a.m. Okay? Please comment below if you like the show. If you don't like the show, please comment below. Don't just be a coward. If you want to invest with us, CardoneCapital.com, CardoneCapital.com. If you want to do it on your own, GrantCardone.com/real estate course. GrantCardone.com/real estate course. Ryan,
Can I just thank you for doing this show every Monday?
Thank you, Ryan.
You're really helping a lot of people. No, I'm being very genuine and very serious.
Yeah.
Like when we started this show 4 years ago or 3 years ago, I wanted to do it because I was selfish. I wanted to learn more.
Yeah.
And the way that you do these numbers, the way you make things
You can't
simple.
hear it? You can't hear it?
You can't hear me?
Go to your mic.
Just the way you make things so simple, it's really empowering for a lot of real estate investors. No, I'm being very serious.
Thank
a
you.
lot of people at the 2-day boot camp that came, the way you broke down, just being very simple, because a lot of the callers, they call in, they say, hey, are these numbers real, right?
Yeah.
The way I see you do numbers, you say, here's the number of units, here's the rents, here's the realistic numbers, and so that way you're spot checking what people are telling you, right?
Yeah.
So anyway, thank you for doing the show every single Monday.
Thank you.
And if you guys want to thank Grant, comment, post below.
But by the way, make sure you comment on what's that magic thing I know. And number two, these numbers right here is me selling to one person. This isn't me selling to a fund and turning this into a REIT. That would be another multiplier on top of this. And that's the game I'm playing, just so you know. It's not to make 83 million back. Yeah, that's good. That's my parachute, okay? I'd love this score right here to pick up 188 million after I get my money back. Number one, you want to get your money back. Two, you want to get your cash flow. Three, I want to have a score. But the other possibility was if I could accumulate enough of these assets, which is what we're doing over here at Cardone Capital, we want to create 10,000, 15,000, 20,000, 30,000 units like this, not 700. And then bring it to some of these very carnivorous behemoth
institutions.
The guys that eat Moby Dicks.
Yeah.
They wake up in the morning, hey, we need a couple of Moby Dicks to eat today, but tasty, tasty. Yes, it was tasty. They eat Moby Dicks the way Moby Dick eats krill. And I'm hoping one day I give them a big freaking fat bunch of Moby Dicks and say, please, feed yourself.
That's exciting.
Hey, if you like this video, make sure you go watch this video right now. I'll see you there. Hey.